Financial ratios. Financial ratios. Once again, you are welcome to my channel on YouTube. Today, we'll be discussing a little about financial ratio. Financial ratio is very important for business. For you to be successful as a businessman in any kind of business that you might choose, financial ratio is something that you need to know about. Once again, if you have not subscribed to this channel, I want you to like this video and subscribe to this channel. Let's move on. Financial ratios. To be a successful entrepreneur, you must have a firm grasp of the numbers in your business. You must be familiar with numbers in your business. Over the years, several financial ratios has been developed as tools to help businesses understand the numbers, especially business owners, that will help them to understand the numbers in their businesses with greater clarity. We need to know the numbers in our business, not just knowing, but we need to know them in such a way that we'll be able to use them for the progress of the business. Some of these ratios we are talking about, the first one we talk about is the gross margin. The gross margin. The gross margin is the amount of profit that you earn after deducting the cost of goods you sold, and all other direct costs involved in producing and delivering your product or service to your customers. It's when you deduct the total cost that you will incur in the cost of producing and delivering your goods to your customers. When you remove it, the cost of goods and all other costs, that is the gross margin. The gross margin is a kind of ratio that we need to be familiar with. Most people only calculate the cost of goods. They don't calculate the cost of producing those goods. They don't calculate the cost of delivering those goods. But for you to determine the gross margin of your business, you need to calculate the cost of producing and delivering your products or your services to your customers. The second ratio we want us to talk about is the net margin. Net margin. Net margin is the amount of net profit that you earn per sale or per month after deducting all of the direct, indirect, and attributable costs involved in operating your business. After deducting all costs, either direct costs, indirect costs, and any cost that can be attributable when you are operating your business, after deducting them. Net profit, the amount of net profit that you earn per sale after deducting costs, all costs, direct, indirect, and attributable costs. For example, a provision store or supermarket mark up the product they sell by an average of 20%. It's not constant. It's not constant. It varies. But the average is 20%. But the average net profit that grocery stores earn on sales is closer to 3%. I want us to understand this very well. I intentionally pen this down so that I can explain it very well. But the average net profit that grocery stores or provision stores or supermarkets earn on sale is closer to 3%. We said 20% then, but now 3%. The difference eaten up by all of the costs involved in running a grocery store or provision store or business. You add the other expenses. For instance, you buy a an Exeter corn beef, the big size. For instance, when you bought it, it cost you about, let's say, 3,500 naira. Okay, let's say 3,500 naira. And you calculated your cost of transporting it to your store. You calculated other costs that are involved, even the telephone that you made, and the cost of transporting it to your store. You add all these costs together and you are to sell this product. Let's say all the cost is 200 naira. The amount it costs you to move these things to your store is 200 naira. And you bought it for 3,500 naira. So your total cost is no longer 3,500, but now your total cost is now 3,700. So if you are going to sell it, you should know that you have bought the product for 3,700. You can now add your own profit. If you are making 200 naira on the sale, that means you are going to sell it for 3,900. If you are making 300 naira on the sale, you are selling it for 4,000 naira. That is dependent on you as a business owner. As a business owner, it is very germane, very, very important for us to know the financial ratios in our business. We have mentioned two: gross margin. We have mentioned another one, net margin. So the next one that we want us to consider as a financial ratio that we need in our business is ROI. ROI. ROI simply means return on investment. Return on investment. Return on investment is usually the total profit expressed as a percentage that you earn based on the total amount invested in your business. The total profit expressed as a percentage that you earn based on the total amount you invested in your business. For instance, you invested 100,000 naira in starting your provision store. 100,000 naira in investing that you invested in getting products into your provision store. At the end of the year, okay, let me take it at the end of the month. That would be very easy for us to calculate. You turn this money over and over and over. At the end of the month, you have grew your business from the worth of 100,000 naira to 120,000 naira. You will now, for you to calculate your return on investment, it will be 20,000 naira divided by 100,000 naira times 100. So by calculation, your ROI will be 20%. That is the return on investment. The total amount includes the money that you have paid out of your own pocket plus all of the other money that has been invested or borrowed in any way. You need to include them as part of your return on investment. I will also speak on return on equity. Return on equity, ROE, return on equity. This is the percentage return that you earn on the money that you have personally invested in your business. The percentage return that you earn on the money that you have personally invested in your business is your return on equity. I will speak about two more before I put an end to this particular video recording. I will talk about the return on sales. Return on sales. That one is called ROS. Return on sales is usually the percentage of gross profit that you make for each sales. The percentage of gross profit that you make from each sale, not the total now, but each. Anybody that buy a product from you, the percentage of the gross profit, the profit you make from that sale, of that particular sale. For instance, like in a provision store, there are some goods that your return on sales is just 15 naira. It's so small, right? I know you will think that. But when you multiply 15 naira into 100 places, it's no longer 15 naira. It has become 5,000 naira. And this is a product that only one person can buy. So if you are selling a particular brand of product and making 5,000 naira per on each per customer, is that not a good business? When you add 5,000 naira, you make 5,000 naira on product A, 5,000 naira on product B, 5,000 naira on product C. You will discover that at the end of the month, your profit will be in a high number. The last one I will talk about, as part of the financial ratios that we should consider in our business, is return on energy. Return on energy, that one is ROE. Return on energy is perhaps the most important calculation of all. I said that because this is the return you receive on the amount of physical, mental, and emotional energy you invest in your business. I said this is the return you receive on the amount of physical, mental, and emotional energy that you invest as a business owner in your business. Sometimes it can also be referred to as return on life. We must be continually aware of how much of your life you are investing in your business. Physical, mental, and emotional energy. That is an encompassment of life. Financial investment can be recouped or replaced, but the amount of your life that you spend on any business activity is gone forever. We have discussed financial ratios that we must know before we start that business. Financial ratios to know before you start that your dream business. The first one we talk about is the gross margin. After the gross margin, we talk about the net margin. After that, we talk about the return on investment, popularly referred to as ROI. After that, we discuss return on equity. That one is ROE. Return on sales, ROS, and return on energy. If you have not subscribed to this channel, please do. Subscribe, press the subscribe button, like the video, and help us to share the videos. Thank you. We shall see again in our next video. You can drop your comments, contributions, suggestions, or maybe you have a topic in mind that you want me to talk about. You can also drop it in the comment section. I will be glad, very, very glad to receive them. Thank you.